it's my year, yeah.
Good morning, everybody. We have to start the show right now. That's what I'm being told. So welcome to the morning show here on Stock Market TV. I'm Spencer. You got Steve. You got JC. You got Alfonso backstage making charts for us as we speak. Got a great show today. A lot to discuss. A lot of after hours headlines last night. Some very interesting charts on today's show. Very excited for our guest, Eddy Elfenbein from Crossing Wall Street. He'll be on about a half hour or so. And then we have Sean McLaughlin on at around 9:30. So if you're watching in the chat on YouTube, good morning. Hit that like button for me, please, and thank you. If you're watching on our website, stockmarkettv.com, if you want to pop on over to YouTube for 1 second and hit that like, I would also appreciate that. And if you're watching on Twitter, hello on Twitter. How you guys doing today? All right, let's roll.
All right. Good morning. Good morning, everybody. Let's go. I wanted to zoom out a little bit today. That would be I thought that would be wise. Before we zoom out, Strazza, any thoughts? What are you thinking about? I've been a little bit out of commission for a few days this week, right? It's Thursday.
Yeah.
We haven't spoken much, you and I, not as much as we normally do when I'm at the desk all day. What are you thinking about?
Crypto.
Yeah.
I went through all my crypto accounts yesterday.
How many crypto accounts do you have?
Way too many. So 4. And
I have 2 now as of yesterday.
Look at you. Look at you, Spencer, growing up.
Well, I had 1. Now I have 2.
Which 2?
Well, I was always in Coinbase, and yesterday I made a Fidelity crypto account.
So you always, if you don't have 2, it's a grave mistake.
That's a lesson we learned years ago the hard way, for sure. 100%.
Just 1. Listen, you're not trading on Fidelity or Schwab. There are times when their systems are going to be down. It happened to me last night, and I was thinking, boy, are the animal spirits alive and well out here? I can't even deposit to Coinbase. I looked on Binance. USD deposits were like paused or something. But these are the things that happen during crypto bull markets when the altcoins are all up 20% after hours. So I have Gemini. I have Coinbase. I still have Binance. I have some stuff on eToro, believe it or not. But I'm having
and then you really just need you really just need like a wallet for all the DeFi protocols as well.
Yep.
That's a separate thing.
I got like 3 wallets. Anyway, this is the exercise I'm doing. I'm going through my old list. I have a lot of leftover alts from the last cycle. Nothing super material. Some were worth maybe a couple thousand. Some at this point, a couple hundred, because they were originally 1,000. Then they drew down 80-90%. So, and I'm asking myself the question: if I were, I'm buying crypto, would I buy this today? And if the answer is no, selling it, I'm going to buy something that the answer is yes for. Does that make sense? So I got these Elron Gold, H-Bar. You remember these, JC?
Oh, I remember them well, my friend. I remember them well.
So I'm going to look at the charts. I'm going to look at the relative strength. Ask the question, would I buy this today? If not, no questions asked. It's gone. Put it into something that I do want to buy. Avalanche looks super spicy to me.
Yeah.
So added to that. Yeah.
Strazza is thinking about the old block and chain. I'm thinking a little bit more traditional assets here.
But not tech. You hate tech.
Who hates tech? I don't hate tech. Who said I hate tech?
You never want to talk about tech with me.
We literally talk about tech here every single day. Tech historically outperforms in a bull market. It's outperforming this bull market too. Technology just closed at a new all-time weekly closing high last week. NVIDIA making new all-time highs. We talk about it all the time. Microsoft was up 7.5% for the month of October before the market started to rip. Again, technology is a leading indicator. If you hate tech, you're an idiot.
So the Twitterati has spoken. It's really cute what they do, JC.
Who's that?
They rank our arguments and give points on Twitter. It's really funny.
We're not arguing. You're just saying that I hate tech. What have I said in the last several months that would make you think that I hate tech?
The fun thing about most of the discussions that we have, sometimes constructive, sometimes not, is that we agree on like 99% of things, but we try to focus on and really, settle the disagreements on that 1%. But the people have spoken. So JC was uber bullish at the lows a few weeks ago. So they're giving you a point for that. Are you proud?
No, it has nothing to do, like it's not about like, oh, I'm proud. Oh, because the math said that we should be buying stocks very aggressively. And I listened to math. Like, it has nothing to do with me. I just count, So like, I just want to give credit to all the mathematicians out there who came before us, who taught humans how to count.
Mm-hmm.
And those of you today, this day and age in 2023, who actually take the time to actually count, kudos to you. Those of you who are too lazy to count, or maybe don't have the time to count, I would encourage you, find somebody who does count and get their notes. That would be my advice. How do you feel about that, Spencer?
Sounds like you're a professional counter to me.
Somebody's got to be.
I did a whole thing on this about, 3 years ago now at Chart Summit during the pandemic, where I distinguish between what we call aggregate breadth indicators and then a more granular approach to analyzing market breadth. And the more granular approach, a lot of times people don't think of or don't even realize that maybe they're doing breadth work when they are. And all that really comes down to is, sure, we can run different tables and scans and stuff. But the granular approach to analyzing market internal, it's just going through a ton of charts.
Yeah.
That's it.
True.
So
and it was an institutional customer of ours years ago, when we were mainly focused on institutions and then realized what a shitty business that is. But anyway, it was we're not going to talk about the hedge fund, but it's a household name.
Yeah.
And this gentleman tells me, JC, it's like the JC breadth indicator. It's not like percentage above 200-day moving average, new lows list. It's like JC takes the time and goes chart by chart. And you know where I learned this from years ago, 15, 20 years ago? Chris Verone. Chris Verone was really part of that inspiration. He used to say all the time, put on some music, put on some headphones, because this is in the old office days where you were surrounded by other people. Sure. And, put on the headphones and just press play and just go through all the charts and just watch the movie, if you will.
A lot of chart platforms or programs have that, where you can literally grab a watch list, hit play, set it to a certain interval timer, and it'll spend like 5 seconds.
I can't do that. I need to do it manually, right? Because like every 2 seconds, I'm going to stop it. And then right, you know what I mean? Like I can't do that. I'll literally just go one by one. Okay, next. Now, sometimes it'll just be click, 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 nothing, nothing, nothing. Ooh. Yep. Click, 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 nothing, nothing, nothing. Ooh, right? Yep.
In a weak market, the good ones.
Giancarlo can make a rap song out of that.
But so I would encourage anybody who's interested in doing something like this, use software. It's your friend, right? Like my favorite for this is TC2000. I have like a breadth total market dashboard set up where I could tell you what any industry group is doing, who the leader is in a second, and you can flip through charts so easily. You can look at 100 charts in 5 minutes. So that's how we look at breadth most of the time. You'll see the aggregate indicator shared all over Twitter all the time. We ran some stuff like on the ARC universes yesterday, JC, the short-term highs and stuff. But you're really just better off looking at all the ARC components, So 2 ways to do it.
All right, hit the bumper, Spencer. Let's go. Let's zoom out. All right, I wanted to talk about the S&P 500. And really just reiterate that we've been in a range bound environment for a couple of years now. So when you hear people talking about how this is an extended market, can this rally last? It's like, bro, we haven't even gotten going yet. Like, this is just the appetizer. This is just the amuse-bouche. This is just that initial thrust off the lows. We haven't even gotten going yet. So if you think this is overextended, if you're wondering if this rally can last, man, you're going to have a really, really difficult time in this environment. Because like I said, We're just getting going. So why don't you throw up the slide in the back, kind of zoom out and just take a look at these 4-year cycles and how they tend to behave. We just entered the most bullish time. The most bullish 3-month period of the year, November through January. The most bullish 6-month period of the year, November through April. Election years are super bullish. You can fight that if you want. Knock yourself out. I'm not seeing any evidence out there that would suggest fighting these trends. Maybe one day we get some data that suggests to fight this trend. Maybe, I don't know. But right now, with the information that we currently have, to fight the uptrend in stocks, to not participate in this bull market is irresponsible. Why don't we zoom in on this chart on the next one there? And these are all the pre-election years going back to 1950. And what we're seeing here is that, again, this is the time that stocks do well. And guess what? Stocks are doing well. And history would suggest that they're going to continue to do so. People are like, wow, this is such a strange market environment. Is it? Go to the next one. We've never seen this before, JC. Well, here's every pre-election year going back 75 years. And the one in red is this one. This could not be more normal. It's actually uncanny just how normal this year has been. Could not be more normal. And then finally, throw the next one up. Just want to reiterate that this is historically the time that small caps tend to outperform large caps. It's called the January effect. I love how the January effect starts in November, but hey, that's what it is. And guess what? Small caps are starting to outperform large caps. Again, perfectly normal, and would be consistent with all of history for this to continue through Q1 next year. All perfectly normal. So, I know it's easy to get lost in what did the market do today? What did the Powell say? What did the earnings last night? Nvidia is a scam. Da 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 da. Like, I understand. We have our own issues and biases in the short term. It might be different than other people, but we struggle with that ourselves. The just what happened today, what happened this week, and we have to zoom out. Now, fortunately, we do this once a month where we really zoom out and it reminds us of these longer term structural trends. I encourage you to do the same. But don't just wait till the end of the month. Do it in the middle of the month. We do that too. And here we are right in the middle of the month, literally, actually. We just finished November 15th, so it's now November 16th, right in the middle of the month. And I think it's important to put things in perspective. There's a very high likelihood that this bull market is just getting going.
So when you had shown the zoomed out S&P chart,
throw that slide up there, slide 2.
I couldn't help but think to myself, boy, I missed 2016, 2017. Those were some good years, right? And then
Strazza, they were telling me about double dip recessions and the market crash and how Trump is going to ruin everything. Like these idiots had their own issues back then. They're different issues today, but they're just calling them different things. Like maybe they're not blaming the Trump, they're blaming inflation, whatever. But it's the same thing.
That's important context because 2016 was a crazy year, full of fear, right? I encourage you to go back, look at that chart, line go up very steadily through 2017. Now, that was an election year, 2016, which is, you talk about how good the pre-election year is great, but guess what? We got a month and a half left. I'm looking forward. Guess what else was an election year? 2020, after we got COVID out of the way. What a year, right?
We had the greatest 12-month period in the history of the United States stock market. We've never seen a more powerful 12-month period ever. Yeah.
So while I love everything you just said about seasonality, I think, this is not just a month and a half thing. It gets better when we go into next year, the seasonal trend. So election year is historically very good. Maybe we'll have another 2016-like year next year. Wouldn't that be something?
Well, in 2016, we were coming off a bear market, right? In 2015, I was a perma bear in 2015. I really did think the world was going to come to an end. I thought Deutsche Bank was going to be gone. I thought Credit Suisse was going to be gone. Credit Suisse just was gone like recently, right? So like, granted, we were bearish, we were short, we did well in 2015, but I thought it was going to continue into 2016. And then we got new data in January and early February that suggested being short was irresponsible. Now, at the time, I was in the camp that it was just a mean reversion rally and probably going to roll over. And then the data suggested to continue with that trend. Same thing in 2020, by the way. That initial thrust off those lows, I was in the camp that it was a mean reversion rally, and then maybe we roll over again and the market proved otherwise, right? So, these initial thrusts, a lot of times is just the beginning, and then we'll see what happens after that. So we got the initial thrust this cycle, best first 6 months to the NASDAQ ever in history. Consolidated for a few months, and now here we go again. This is bull market behavior. In bull markets, what do you get? Sector rotation. You get rotation into different sectors. And Eddy Elfenbein's a great guest always, but specifically today, that we're focused on trends. We're focused on leadership groups. Eddy's just trying to buy good stocks. So I'm really curious as far as which industry groups he's focused on. I've known Eddy for a long time, and I am willing to bet that Eddy's got some industry groups that he's focused on that are different than ours. I also am willing to bet he's got some industry groups in there that are right in line with what we're seeing. But he's going to bring out a couple of gems. I'm pretty confident of that.
Wait, going back to 2016, wasn't that a fairly typical? Like, I remember January being tough, right? Or maybe the first 6 weeks of the year were pretty tough, but that was like a fairly typical start to the year, right?
No, not at all.
I think it was
actually a terrible start to the year.
No, I know. It was bad. I'm saying, but the fact that it was bad, it wasn't like alarmingly bad, is what I was saying.
Well, it had already been alarmingly bad in 15. The alarmingly bad ended at the beginning of 2016.
16, yeah. First 5 or 6 weeks.
And then it started getting going. So in January is when the leadership groups bottomed. Latin America, emerging markets. I remember like it was yesterday. Gold miners, I remember bottomed. The junior gold miners tripled from there. Brazil, base metals, Freeport McMoran, like all that stuff, like the stuff that if you drop it on your foot, it hurts, like that sort of stuff, bottomed in January. And then in February, the S&P retested, Europe retested, Japan retested, some of the laggards retested, and then they all ripped from there. But the ones that bottomed in January were the leaders. They were the leaders. Yes, not a typical year at all. Very different, actually.
So one more thing about election years, probably an important thing to remember right now. What does the market care about in terms of who gets elected, right? Because you're going to hear all sorts of crazy stuff about how XYZ person getting elected is terrible for stocks in the next 12 months.
You know what the answer is? You want to know the answer?
Tell me.
The answer is the market just wants somebody to be elected.
That's what I was going to say. They just want to know.
They just want the election to be over.
The market wants certainty. And when the
market wants less uncertainty.
When you go all the way back and look at all the data, there's no favoritism by the market toward one party or another.
No.
There is, however, favoritism toward a known candidate, an incumbent, typically. What's interesting about the upcoming election, at least the way it looks right now, and I think you got to give it time because it could change. But for now, you got two incumbents, basically. You got two guys that the market knows very well.
There's no way this Biden guy is going to be. There's no way this Biden guy is going to run.
Biden guy,
and that's why I said
he's going to run. Okay.
Probably changes. I think you're right, but for now, that's what we're walking into. So the market should be comfortable with that until it changes. But I agree with you, JC. I don't think so either.
Yeah, I mean, listen, it looks like Trump's going to win again, and the market did great when Trump was the president. So the market knows that, And then think about all the people. I was living in California at the time. All the people that went to cash when Trump was elected, like, oh my God, this is the end of the world. This guy's crazy, blah, blah, blah. They missed one of the greatest years in the history of the stock market because they thought that. So if we're back in that scenario, are they going to make that same mistake again? My suspicion is they won't, because that must have been really painful, right? Not only were they pissed that they didn't like the president, they also lost a ton of money by not being, I mean, they just double, right? So if Trump wins again, are they going to make that same mistake again? I don't think so.
So important to leave your emotions and politics out of the market.
Mm-hmm. That's right. Like if you are letting your political beliefs impact the decisions you're making in the market, man, that's like me not buying stocks because the Dolphins didn't win on Sunday or something. Like what? Like
It's one of the worst mistakes you can make, and it happens. Yeah.
What?
Oh yeah, it happens. Are you kidding me? Does it happen? Oh yeah.
Expressing your political beliefs through your investments, Spencer.
That's right.
Oh,
Just
I
because you don't
thought-
like the president doesn't mean you
okay.
should lose money.
I thought you meant rooting for the Dolphins. Is the biggest mistake you can make. But yes, I agree with
Well,
that
I
too.
didn't have a choice. Like it's like
Okay,
your family
okay.
members. Like I can't choose my sister. Like I like my sister, but even if I hated her, she's still my sister. Like I'm a Dolphins fan. What do you want? Like I grew up in Miami. What do you want from me?
I don't know. All right. We could do some headlines, some movers, or you guys can just say screw that. We can bring on Eddie because Eddie's
Bring
here.
in Eddie. Are you kidding me? It's not every day we got Eddy Elfenbein in the green room. Bring a
I have a
brother
feeling.
in.
Eddie, are you good? Yeah,
No,
he's good.
He's a pro.
Thumbs up. All right. We're bringing him on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Eddy Elfenbein in the house.
Hey, JC, how are you?
Listen, guys, for people who don't know Eddy Elfenbein, Eddie's so OG. Like, I mean, what? I was with Barry Ritholtz a couple nights ago. After Barry Ritholtz, are you the second oldest blogger? Not by age, in terms of length of blogging, to be fair.
Yeah, 1943 is when I started. It was different back then, but things evolve. You
had to chisel. You had to chisel the blog post on the rocks.
Exactly, in real time. Yeah.
What was Twitter like back then? Must have been wild.
Well, just like today.
They hated Roosevelt. It's crazy. Eddy Elfenbein, Crossing Wall Street. Somebody who a lot of us looked up to early on in our careers, who you inspired a lot of us. And thank you for that. But enough of that. Here we are. It is November the 16th of 2023. Eddie, you're not like us in some ways. You're like us in a lot of ways, but in when it comes to the market, you're interested in buying good companies.
Mm-hmm.
I don't know what that's like. Can you explain it to me how that works?
In a lot of ways, JC, you and I are like, if there's an economic report that comes across, I know you don't care about that. You're looking at the charts. What are the charts telling you? And it's so often the charts are smarter than the economic reports, and the charts are before the economic reports. I'm in a similar way, but I just focus on good companies going for good prices. I'm out there looking for bargains. It's very hard to do. The market is always moving, always throwing different things your way. But that's really what my focus is on, is finding the best companies to buy for my ETF and, for that I put on the blog.
And to your point, Eddie, as it turns out, JC, 9 out of 10 times we are buying good companies because we're identifying secular leaders, long-term uptrends, long-term leadership. And you got to be a good company to have a stock chart.
And that's why we're buying Neo, because it's such a good company, right, Strazza?
Listen, I said 9 out of 10. We do the mean reversion stuff.
Fair, touche, fair.
Sure.
If you do 9 out of 10, you are very far ahead of the game.
So what makes a good company, out of curiosity? I mean, and by the way, it's not that I just focus on the charts. It's that I focus on the market behavior. It just so happens that the best way to visualize that market behavior is in chart form.
Absolutely.
There's a lot of charts, but it's the market I'm interested in. But this whole thing about good companies, like what is a good company?
A company, it's very simple. A company that serves its customers well, no matter how that can be. It can be many, many different ways. It manifests itself in things like, I like to look at strong operating margins, strong history of growing their dividends, earnings, revenue. Want to see, do they have a strong market position? Goes back to Buffett talking about a strong moat. So many good companies that have a well-defined are able to raise prices whenever they want. There have usually efficient uses of capital. And also, I want to be able to trust the management. I place a lot of importance in that. And not a lot of companies out there fit all those things. The good thing is there are thousands and thousands of stocks out there. So I look through and I choose, for the ETF, I have 25 of my favorites that go in. I hold that for an entire year. I don't make any changes. And then at the end of the year, 5 new stocks come in, 5 stocks go out.
So you're only doing
hold on. Why? This is something I think about a lot. Do you make these changes at the end of the calendar year? Do you have your own fiscal year? Why and why do you make that decision?
It was just when I started doing it, when I was blogging about this, that we did it at the end of the year. I figured, that's the easiest time. Maybe we could have chosen another date, but I think it worked well. And it's usually have to make those changes kind of during the whole last week. It's not sort of at the end of trading on for the old year.
So let me ask something about how you're actually doing this, because I know, because I'm interested in these things too. This is a tough job. There's a lot more that goes into what you're talking about than just looking at some charts, right? You can quantify some of the metrics that you just threw out, whether it's revenue growth, margins, right, valuation metrics, but you can't really quantify others, like a good leadership team, right, a great CEO, a moat, stuff like that. So how do you navigate all of this information, and are you weighing some things a lot more than some of the other things that you threw out?
Mm-hmm. I guess, as I said, I weight. Corporate management is pretty important to me,
Totally.
and I like to see how much faith do I have in the company as far as their guidance. I don't mind negative guidance. I mind guidance surprises that seem to come out of nowhere. There are good companies. Aflac has been on the buy list for nearly 20 years. It's a wonderful company. They stand behind when they say something. I have a great deal of faith that they're going to stand behind it, and I trust them. So a lot of times when you see companies come out with their adjusted earnings, their GAAP and non-GAAP, obviously there's a lot of shenanigans that goes with the non-GAAP, but they exist for a reason, and some companies use it properly. And I like the company. You save a lot of headaches by having companies that you believe in and that you trust.
So if somebody drops a Friday afternoon press release with revised guidance, they're off your list.
It's not a good sign. It's not a good sign.
All right, great. So let's talk about some names.
You mean people won't forget about it by Monday?
Turns out they don't.
In theory, like, you remember shenanigans like that longer, probably. Like, if you actually did it like a normal person during the work week, like, you're not right. We're going to hold that against them.
Can I tell you about one of my favorite little companies?
Please.
It's called Miller Industries. Wonderful company. And what I like about it, and this is something that investors should know about, the number of Wall Street analysts who follow this company, 0. Nobody on Wall Street even follows them.
Love that.
I'm one of the only people I know.
Explain why that happens to some.
Yeah, and also, this is Eddy Elfenbein doing technical analysis, understanding the behavior of the market and therefore its participants, and recognizing that Wall Street doesn't cover this particular name, falls under the umbrella of technical analysis. Eddy Elfenbein, quite the technician.
Absolutely. See, to your question is why companies they're not followed by the major Wall Street firms. Couple reasons. One is they're just too small. It's about 400 million in market cap, which isn't that small, but compared to the behemoths on Wall Street, it is. Also, it's a kind of a positive because it probably means that they haven't had a recent M&A experience.
They don't need the money, Eddie. They don't need the money.
They don't need to float bonds. They don't need to float stock. They don't need that. They're fine. So nobody's going to follow them. If you start doing that, then bam, you're going to get a buy rating.
Are you guys listening to how Wall Street works? Are you guys listening out there? Like, Eddie's nailing this.
No, but that's more often than not why a company doesn't have analyst coverage, because they're not going to make money off of them, so it's not worth their time.
They're not profitable, but magically you go to a bond offering or a dumb M&A idea, And then suddenly you need a bunch of money, and then they give you a buy rating
or a secondary or
a
whatever,
second-
right?
Yeah,
Interesting. And what does this Miller Industries do?
they make tow trucks. And what happened was they got absolutely crushed during COVID, but they were reinvesting in themselves, expanding capacity, growing their market, adding technology. Really, and nobody really saw this or understood it. This year, they have been posting blowout earnings. They just their goal in this 3 quarters of this year, they've already passed sales of all 4 quarters of last year. That's how strong they're growing, and nobody knows this story. Their trailing earnings is about $4.50 per share. It's going for less than 10 times earnings.
This comes back to what this we've had a theme all week, Eddie. Morgan Housel's new book. I'm almost finished with it, about betting on things that stay the same instead of which is easier than betting on this like new thing around the corner, the next big thing. People are gonna make poor parking choices and are gonna need to get towed. That ain't changing anytime soon. People need insurance. Like Eddie's bets here are on things that are not changing. So I just wanted to reiterate that because it's kind of been a theme around here over the last week.
I mean, the things about predicting the future. Let's say if somebody came up to you, let's say 40 years ago, and they said, I want to be in computers. I think computers are going to change the world. Tell me what to invest in. You probably would have been told IBM, Wang, and DEC. So even if you were right, you can still be wrong on what happens. So you never know. And so, to what Morgan says, betting on the sun rising is a pretty good bet. You're not going to get great odds, but it's a surefire way to go.
Right, what else? What else is not going to change?
People are going to need food. People are going to need housing. People are going to need shelter. People are going to need to borrow money. I like a stock that's been doing very well is Trex, the deck maker, the fake wood maker. Really doing very well lately. Love the recent inflation report. They're up about 10% in one day.
I'm a customer. I'm putting a new deck out back as we speak.
By the way, and a lot of people, the complaint used to be is that their fake wood didn't look good, but it's changed a lot. A lot of this stuff looks very, very authentic.
I think it looks great.
The house I bought had a deck with real wood, and it looks terrible, and the wood sucks, and never again. So
it doesn't rot. It's easy to clean, and they do a great business. The only downside or upside is it's very much tied to the real estate cycle. So it can be hit or miss. But I still think the long-term trend, secular trend, is very good. Wonderful stock.
There goes Eddie again with his technical analysis.
This is a leadership group, right? We talk about it on here all the time. It's not just the home builders, it's the building products and all the related stuff too.
So much radiates from housing. Yeah. So much. I mean, it's one of the most important events that happens in the economy is when there's a new family and they buy a home. And think of all the things that radiate from that. They get a mortgage. They go to a place like Target and they get bedding and lining. They do so many things. The builder gets tools and they get wires, and so many things happen from this basic point of people buying a home. So much of the economy is around that.
It's interesting that this is an industrial.
Is that what they listed as?
It's an industrial because they're building, what is it? Building materials and parts or whatever. Yeah, building products and equipment, but it's
I want to talk about
related.
So JC, he's got Moody's on here. We were talking about Moody's and S&P Global and these ratings agencies the other day. Eddie, how does Moody's even make money?
It's a good thing. They're the only thing that's better than being a monopoly is being a kind of monopoly, because then you don't get right. I mean, it's a duopoly. And I mean, God, what a great business they have. Moody's is two businesses. It's the Moody's Analytics and the Moody's, I think it's Investor Services or Information,
which is the ratings.
Right. And it's the analytics is kind of the jewel in the crown. So it's all the numbers behind all the ratings. So much of financial data that they're behind. It's great. It's a great business.
It's
And,
such a
I
good
mean-
business that we can have the biggest bond market crash in history, and then after the bond market crash, they threaten to downgrade the debt,
Mhm.
and they still have a good business. That's
You
how good
still
of a
have a good
business it is.
business.
Well, these companies are kind of in with the government, are they not?
Absolutely, and that's a great place to find a government. Look at Warren Buffett. What's the basis of his empire? It's through car insurance. You have to buy it. You can't
Yeah.
not buy it. The government forces you to buy his product. And that's
And what you're alluding to is the ratings agencies. You can't choose to not be rated.
exactly. You got to go. Your choice is S&P or Moody's. But I mean, God, look at that! Look at that chart.
Straight up.
Mhm.
And then another one that looks like this. Let's just go here because I know something about this one. Intuit is just so good.
Taxes.
Does this stock ever go down? Well, they dominate.
You have this
So
one too, Eddie?
Intuit, yeah.
in another career, I did a lot of accounting,
Mhm.
and these guys absolutely dominate.
Right. I mean,
Like, there's really no other
you
option.
know, when it's always a good sign when your product is the regular noun. People know TurboTax, or I FICO. People know FICO score. They may know nothing about FICO business, but it's like when people say Kleenex instead of tissue. That's a good sign.
Uber.
Uber,
Yeah,
sure.
this is a good thought. When companies become a verb, like
Mhm.
Google, Uber, Xerox, back in the
Right.
day, right?
Nobody
Pampers.
says, yeah. Just ask Jeeves it. Nobody says that. They say
No.
Google it.
No. What's
Ask
the
Jeeves
Microsoft
what's
one?
the-
Bain?
Yeah.
How,
I,
how does Jeeves feel right now being the original AI?
that's a good question.
Who owns it? IAC Interactive? They used to,
Nobody uses that, man, for like 20 years.
but they own it, right?
Somebody else.
I think they turned it into about.com, actually.
You're absolutely right. Yeah, it is.
Look at that.
IAC.
Ah, somebody's paying attention. That's what happens when you're friends with Caleb Silver. You get, you start learning about the IAC Interactive stuff. By the way, get Caleb Silver on the show. Eddie, what else? Talk to me. What else you got?
Oh boy, Scott, so many good things out there. I noticed recently a lot of the medical device stocks have been getting absolutely slammed. A lot of that is, the weight loss drugs and such. So there are a lot of that's historically, that's been a great area to invest. So I'm looking in that area. We got Stryker, company I like a lot, has been a strong company for a long, long time. That sector is not always look for a good company that hasn't performed well recently. It's a good place.
Yeah, but it looks way better than all of its competitors. In fact, I would challenge you to find me a competitor that looks better, actually.
And so is it ahead of all the medical device stocks? It's leading them all?
Yeah, man.
It looks a lot better.
Okay.
Yeah.
I didn't even know that. But thanks for, and it doesn't surprise me at all. So
I mean, Boston Scientific, you could throw in there. What's the other one? Becton Dickinson.
Yeah.
Long-term looks good. But yes, Boston Scientific and Stryker. And I spent a lot of time in hospitals during, while we were having all these kids. I have an army of kids now. But we were in hospitals a lot because you got to get checkups and then the kids got to go. And I found myself because you're sitting around and wait in the rooms all the time, waiting for doctors to come in. And I start noticing all the different companies that we trade, throughout the hospital and stuff. It's fascinating.
I love seeing that when I see an Otis elevator, always to take notice of it. There's so many great stocks out there. I love to see them part of the landscape.
Out in the wild.
Mm-hmm.
Can we talk about like industries? Forget like individual stocks. You mentioned medical devices and how you're traditionally good businesses. They've been beat up, so that's got your attention.
Also backed by the government as well. So much of medical spending.
Yep.
What other industries have your attention as it comes decision-making time over on Crossing Wall Street?
Well, I guess right now I'm looking at the sort of rotation of a lot of cyclical stocks have not been doing well, have been lagging pretty badly, and I think there's going to be a point around when the Fed starts to lower rates when we'll see a lot of the consumer staples out, start to get the lead once the economy gets weak, and then we'll see that rotation as the cyclicals get weak. The consumer staples will get stronger. Those are a lot of the food and healthcare. I would put in that. That's sort of what I'm looking at right now. I don't have any energy stocks, and that's an area where I think I may have to do some exploring and to add some names there. I'm not exactly sure yet.
How do you decide? How do you decide on market capitalization? Do you on the ETF? Is there a minimum threshold?
Nope, I'll go anywhere. The only problem is that with just operating the ETF, if it's too small, it can be difficult. But that's
how small do you go in practice?
Would be Miller, which is I think around 400 million and change.
That's nice. Gives you a lot of flexibility.
And you'll go as big as you want, or do you try to stay below something?
Absolutely. I've had Danaher, Thermo Fisher, some huge names. Cool. I've had Microsoft years ago, which I should have held on to.
I was going to say, should have held on to that one.
I know, it was a mistake. I remember I made the mistake. It had gained so much. Like, how much higher can it go? And that's a rookie mistake, and I made it. All the mistakes I've made, all the big mistakes you can do.
We're still making those mistakes.
Exactly. As Mark Twain said, experience is the best teacher.
Do you tend to stay away from the mega caps and kind of fade more into the mid cap?
Yeah, it's mostly a mid cap, but in no way do I think that it sort of works out that way. And so I give no conscious effort. I like to look in areas that I think are overlooked. So that sort of has a built-in bias against the mega caps.
Right. So it's often harder when you're doing what you're doing. There's often more opportunity. The lesser and lesser stock is known or covered.
Exactly.
The more people are trading something or participating in the market, stock's going to be priced, pretty well, right? Maybe that's less opportunity. While when you go down the cap scale, find something nobody knows, nobody talks about, there's no analyst. Maybe there's a big, look at deep value here. This one's got a catch-up trade.
I think Miller is up something like 30-40%, probably even more. Nobody knows it. Nobody's heard of Miller Industries, and I love companies like that.
I can't help but pick up on a theme just from some of your top holdings. There's a lot of like financial software, financial tech, financial data, and all these charts look great. Whether it's Moody's, Intuit, Fiserv, Broadridge, right?
Great. FICO has been, I think it's up like 60% this year. Yeah. And it was supposed to be upended. We were all told not that long ago that its days were numbered. It's still going strong. Another one is Broadridge. I don't know if you're familiar with that, but they do all the proxies, all the votings, all the communications between companies and shareholders. It's basically a monopoly. No real competitors in that space.
Look at that.
Totally boring company.
These all look the same, and I can't help but think it goes back to the fact that you're just buying good companies for the long term. All of these are long-term up.
Are you equally weighting?
At the beginning of the year, that's right. The ETF equally weights them all. The 25 stocks are all equally weighted at the beginning of the year.
Can you, Spencer, throw up the chart of Crossing Wall Street just so you could see Eddy Elfenbein crushing it? I don't know what your, compliance allows you to say or not say, but I can say whatever the hell I want. And this line is going from the lower left to the upper right. Eddy, you're doing a hell of a job, my man.
Thank you. Thank you very much.
We were talking yesterday about how the best groups and the best indexes are back above their prior cycle high. CWS just did that yesterday with 10 semis and everything.
Our high was in July. We did pull back. I was very dumb in October, but I've gotten a lot smarter in November. I don't know exactly what it is, but I got a lot smarter. A lot of people on Wall Street have.
So this is an equally weighted index at the beginning of the year. And then how, like, kind of out of whack in terms of weightings have you seen that throughout the year?
That is a very good question, because then we run up against SEC limits about the weighting. So I believe it's that we can't have 5 stocks that are more than 5% of the portfolio. So we used to be 20 stocks and we expanded to 25. And it turns out that that's almost perfect way that gets us away from that SEC regulation. So that's why we have to do that. That's one of the frustrating things. I had no idea.
What if you hit the limit?
What's that?
What would happen? What would happen if you hit their limit?
I don't know. I guess they would like jump in and tase me and zip tie me and throw me in the back of a car. I don't want to. I don't want to run up against.
Sounds like a
SEC.
fun Saturday night there for you, there, Eddie. Huh?
It is. But the SEC, they have more money and they have more lawyers, so I don't want to challenge that. And we go through the banks a bit. Which the Bank of New York helps us run the fund, so they send us all these alerts about what we need to do.
Throw up slide 2. Have a nice little congratulations here for Eddy Elfenbein. Eddy Elfenbein runs Crossing Wall Street, ticker symbol CWS, equally weighted. How many stocks? 15?
25.
25 stocks, equally weighted. So when you compare that to the equally weighted S&P 500, yesterday, Crossing Wall Street closes at a new all-time high, going back all the way to when they were dinosaurs. Never has Crossing Wall Street been higher relative to the equally weighted version of the S&P 500. So kudos to you. Would you agree that this is probably the best comparison?
Yeah, I'm glad you put it.
You have a different kind of benchmark.
No, I'm glad you put it. I haven't seen it, and it's very difficult to explain to investors because they just want to know how you're doing, versus the S&P 500. And this is what I like about this chart. You dig down and show that at a stock picking level, we are doing very well.
Yeah, I mean, you can't really benchmark your fund specifically against the S&P 500. Investors, can't help themselves, right? Everything wants to be benched against the S&P 500, but it doesn't make any sense.
I mean, we're more of a
mid
cap fund. We're more of a mid cap fund, and we're really killing mid cap.
Right.
So there you go.
Hell of a job, Eddie. Eddie, best restaurant in what is it? Franklin Morgan? What is it? It's
Adams Morgan.
Morgan.
I'll say, we went to Regent Thai a couple of years ago. You and I did. I'm going to say my favorite is the Hangout, which is the diner, and that's sort of the central hub of Adams Morgan. That's the place to go to.
The Hangout, and what? Just traditional breakfast, eggs, the whole
everything. When you look up diner in the dictionary, this is what it is.
In Adams Morgan, not Captain Morgan, but Adams Morgan. Great town. A lot of restaurants. Love it there.
Yeah.
You're not too far from me, Eddie. I gotta make my way down there soon.
Absolutely.
Let's do it. All right. Thank you so much. I appreciate that.
Lot,
nice
Eddie.
job.
Thanks,
Congrats.
Thank you very much.
Thanks, Eddie.
Eddie
JC, I want to see you make your way to DC during an election year, just for fun. But
I've been to DC in election years. Why? What's wrong with?
I know. I want to see DC around an election. I want to see you with all the
But I don't hang out with
the
those
brouhaha.
people.
I know.
Kind of people.
I know.
When were we there? 22? That was last year? It was just
we were there last spring.
I just want to say I'm from New Jersey. We love our diners. I love me a good diner. That diner that he just described sounds incredible. Just
I'm a big DC fan too. I really like DC.
I'm with you, Spencer. 100%.
I like
diners
DC
are
a lot.
the best.
Diners, special place. The tri-state diner scene.
But you want to know the new bummer? The new age bummer about diners is.
I know what you're going to say.
What am I going to say?
That they're not 24 hours. They're not 24 hours anymore.
Yes, you could.
You don't even know me.
All right, I don't know you.
What's the bummer is that these diners historically have the biggest menus. Like anything you can think of is on the menu. It's like a Bible of menu, which is fine. That's not the bummer. That's actually great. It's actually very impressive. The bummer is that when now some of these diners are doing you got to do the QR code. So you have the longest menu on the planet on your little phone.
That's a bummer.
You see what I'm saying? This is like the first world problem of first world problems.
I'm not a fan. No, I am not a fan of the COVID menus.
I'm not either.
I need a menu. I need a real menu.
Especially a diner where you have like literally any food item you could think of.
Yeah. No, I'm with you.
Also, 24-hour diners are kind of going by the wayside, which is unfortunate.
Bring them back. They're coming back, Spencer.
Like
COVID didn't
like
help.
you got them No, you'll have them in Stanford and
All right.
whatever.
All right.
Wait till unemployment starts to pop off. You'll get your diners back.
All right. Hey, let's talk about some other stocks here. We had a lot going on. Let's talk about. Well, let's start with Walmart here. That's kind of one of the big stories in the morning. We'll bring up that chart, do some earnings analysis on WMT. All right, I will start by giving you the numbers. The EPS beat by a penny. The sales beat by $1 billion, give or take. They raised their full year sales and EPS guidance, and the comps were good. And despite all of that, the stock is down, about 6%? Somewhere in that range, 6%. I like what Jeff Mackey said this morning regarding Walmart. We have to get him on the show, but he hasn't responded to my DMs. Hell is high expectations. And Walmart's expectations were incredibly high. That's what happens when your stock is at a literal all-time high, as that chart shows. So even though this report was pretty good by any objective measure, yes, the media will say, and I've seen it this morning, they will say, oh, but the EPS guidance was a little bit light. Yeah, like a little bit light compared to expectations, but everything else was good in this report. I've seen no other. They warned of some mild softness at the end of October, but that sort of jives with what the retail sales number said yesterday. So I don't know if that's really a surprise at all.
I
But
have a Walmart like 20 minutes from my house. I'm gonna go check this place out. I've been hearing about Walmart for so many years. I need to go see what all the hype is about.
is it a regular or a super Walmart? It's probably a regular Walmart.
Well, now you're asking too many questions. I don't know, but like I'm a big fan historically of that website. What is it? People of Walmart, Humans of Walmart. The one that shows the people pictures of people who go there. You know what I'm talking about, right?
I mean,
Walmart.com. I want to go check out some of these people. Have you seen some of their haircuts and some of the things they wear out in public? People of Walmart.com. Here we go.
Walmart is a bit of a wild place, man. It's
Here
like,
it is. People of Walmart.com. Look at this. This one's wearing a diaper. This one, look at this thing. This is a great website.
Yeah. All right.
Drop the link. Drop the link for people.
You know,
I'm not gonna.
You know how the value line geometric is the best representation of the average stock we have. So we use it for information. Walmart, maybe sadly, is the best representation of the average human that we have. Everybody's there. So yeah, you're gonna see some crazy stuff.
Yeah.
Look at this. You could categorize people of Walmart by state. You could go to top rated and top voted.
That's mean.
Okay.
What's mean about it?
Thoughts on the stock?
It's great.
Yeah, it's making new all-time highs. It's probably not a consumer staple. It's probably a consumer discretionary.
It's consumer stock.
Yeah.
Don't overthink it.
All right.
I mean, listen, short term, it's in this, it's maybe back in this range, I mean, this has been a huge winner.
I don't think so. I think this is a great buying opportunity. It looks like you're going to get a hard retest of like this base breakout level on this little earnings reaction.
Yeah, maybe buy any dip into the mid 150s. Is that what you're seeing there, Strazza?
Yeah, like I would draw the line instead of at that blow off at the 2022 high. I would draw it a little bit lower.
Late 20 highs. Yeah, agreed. Yeah, especially since we retested that in October, right?
Yeah, looks good.
All right. What about Macy's here? I know JC doesn't give a shit about Macy's, but this is a stock that people have been calling for its demise my entire career, yet it's still a $4 billion company. Stock is up 11, almost 12% this morning on their report, which they blew it away. Frankly, their EPS crushed it. The margins are dramatically improving. That seems to be the biggest driver of that EPS beat. And they raised their own guidance. They raised their own guidance. So I mean,
you want to see something depressing? Don't go to Walmart.
Go to Macy's.
That is true. I went to a Macy's once. It was bad.
I will be in a Macy's.
There were just like piles of clothes.
Yeah,
I was there like around Christmas time last year at a mall. I guess they're all at malls. Disaster.
I will be in.
Maybe that's
Macy's
part of the
this
reason
weekend.
is because they're at malls. Is that part of the reason? Maybe.
I don't know.
It probably doesn't help. I will be in.
I was going to say being in a mall probably doesn't help their situation.
Malls are very, very binary. Some malls are doing very well. Like a very select few of them do quite well, and the majority suck, right? But
I was at a
Macy's is
mall a few
yeah,
months ago. Remember in the summer, I went to a mall. I was at the King of Prussia Mall, and I was very impressed. Heck of a food court. You
yeah,
know, they
yeah,
had like the bougie stores, but then they also had like, more affordable stores. They had a toy store I went into. That was cool.
yeah. I mean, look, some malls are doing, like I said, some malls are doing very well. The ones in nicer areas do quite
In
well, and
fact,
most
Strazza,
of
my
them don't.
wife the other day said we should go. One of these days, I'm going to take the kids to the King of Prussia Mall, and I said voluntarily that I would go too. How about that?
You're doing some boots on the ground.
I was very
Research.
impressed by the King of Prussia Mall. Very impressed.
Did you meet the King of Prussia?
No, but I was
Oh.
curious as to how that town got its name, and it's actually a very fascinating story. We'll save that for another day. But I encourage you to go check it out. It's actually an interesting story. Yeah.
Spencer, how close are you to the Palisades Park Mall?
Not close at all. I used to be somewhat close, probably I don't know, 25 minutes away, but now I moved away. I'm much further away now. I am very close though to the Bridgewater Commons Mall, which I have yet to experience, but I'll be going there this weekend because I need furniture and things. Let's talk about not retail anymore. Let's talk about China getting smacked around a little bit today.
What are they lying about this time?
They have one good day, and then it's back to normal.
Yeah, I mean Alibaba has always been the driver, right, of China. It's the largest Chinese stock, and that's listed in the U.S., right? So they had earnings. Alibaba, sure. They had earnings this morning. I'm more interested in the fact that Jack Ma's family trust is going to sell $870 million of their stake in the company.
I mean, wouldn't you?
Yes. I would actually.
I'm more surprised that they're letting him.
They are also not spinning off their cloud group anymore. That was a headline from I think last quarter. And yes, so the earnings themselves I think were okay. Let's bring up the numbers real fast. Yeah, the earnings are fine. They did approve a dividend hike, but yeah, the Jack Ma family sale is interesting, and then not spinning off of the cloud is also interesting. So,
By the way, Tencent's twice as big as Alibaba. So
I said listed in the U.S. That's what I said.
No, Spencer, you're right. Baba's the big one.
Thank you.
Tencent's 400 billion.
Oh my god.
What?
Yeah, 400 billion. What do you?
I said listed in the.
It trades on pink sheets,
And-
So
JC.
what? So many
And-
of these companies are in the pink sheets.
I
Anyway,
can't.
$400 billion. It trades 3 million shares a day.
Okay, moving right along.
No?
Anyway, Bob is down what 9%, 8.5% today. Yeah, no, you're right, but I'm right too. This is a
move
silly.
right along.
No, but I was just surprised when I heard that because I didn't think it was the largest, and as it turns out, it's not the largest.
Oh my god.
As JC would say, if you're going to buy Chinese stock, you got to buy the Irish Chinese stocks.
Well,
Oh my
I
goodness.
I hadn't
All right.
quite thought about it that way, but now that you mention it, yeah, maybe. Actually, that's probably a pretty good philosophy in life.
All right.
The
We had
Irish
some-
Chinese stocks, pin
we-
duo.
we had some others. Cisco's report last night was very interesting. It was a very interesting night between Cisco and Palo Alto.
Dude, these legacy techs are looking good. Not Cisco, but some other ones.
Well,
It's getting blasted here.
yeah, that's what I was gonna say. Cisco cut their revenue guidance, which is again never a good thing. They cut it by about four
Benny,
to
not
five
the
billion-
rapper.
$4 to $5 billion. And then what the Palo Alto said something not great as well, or maybe they're getting dragged down with Cisco. Palo Alto's numbers, well, they were fine. They were in line with estimates or higher, so nothing too bad there. But Cisco seemed like
Listen,
yeah.
use this sympathy selling in cyber and cloud to add to anything that you missed, because these stocks have been as strong as anything, particularly these cybersecurity stocks. I'm just seeing looks like a little weakness in the whole group today. probably on the heels of Cisco and Palo Alto. There's some opportunities here.
I have an interesting theory.
Mm.
You know how like all the best new technology historically early on is used by criminals or pornographers? You know what I mean? Like early technology. And that's like a good tell. You know, it's a good tell.
Sometimes.
Have you seen so now AI, we're wondering, is this a new technology or not? Have
Where's
you
this going?
seen the pornography industry using AI?
Oh,
I'm not. This is
Spencer,
not.
you wanna take this one?
Serious. This is serious. They are crushing it. Like the influencers, like the OnlyFans influencers being built by AI. You would never know that it's a robot. It's a AI.
Are you talking about like cartoon pornography?
No. This is
like
these are
AI
no.
running.
There's what's the famous one? I think her name is Emily. Emily AI OnlyFans. Hold on. It's unbelievable. Seriously, this is not a joke. I'm being completely sincere.
I don't know what you're saying though. How are they using AI?
Here, because
I'm assuming what he means is it's like totally computer generated. It's AI generated.
Yeah, it's
not real.
Yeah.
It's not real. Which
I'll get you the name. I'll get you the name of.
No, that's okay. That's okay. I don't need the name. It's fine.
No. Like you can see pictures of her clothes. She has an Instagram account. And it's like a real person. It's fascinating.
No.
It's a real. Okay, that's fine. Whatever.
This is a real. You guys think like stop. This is serious, right? When you look at the internet and stuff like that, criminals and pornographers are historically well ahead of the game. So what my point is that we're seeing that again in AI. They're doing it. You should see.
I mean,
the quality of these Instagram posts. I don't
need
a regular person.
I don't need pornographers to tell me that AI is the future. Okay, I think I already knew that, but I appreciate the sentiment.
I'm just telling
you. Mark is asking the right question. Mark, where do we invest? Well, my closest allegory to that is Playboy, PLBY, which is
all I'll say about
a literal penny stock.
No, so. The answer that we've been talking about. It's Microsoft, it's Google, Nvidia, the chip makers, right, Strazza? You want to rattle some of the other ones off?
No, what I will say about OnlyFans is, God, if this could just be a public company, I'd be buying it hand over fist. Their numbers are insane. Like, what a monster business that's become. It's crazy.
Yeah.
But it'll never be a public company.
No, they will not.
FYI.
No, they will not.
Here we go. Emily Pellegrini.
So just to be clear, is this
Emily Pellegrini?
Is this or is this not a real person? This is a real person?
This is not a real person, but you would never know that it's not a real person.
Oh.
Emily Pellegrini. Go look her up. I mean, in regular internet, she's clothed. It's fine. It's fascinating. Go to her Instagram account, Emily Pellegrini. Here, drop it in the chat for people. You have to see this.
Dropping it in the chat.
It's fine. I mean, she's a pretty girl. It's not like anything.
People know how to Google.
She's not a girl.
People know how to.
She's a robot.
I know, but there's so many vowels. Not all of us are Italian.
It's like.
Yeah, that's true.
I couldn't spell Pellegrini if you gave me 3-4 chances.
It sounds like a.
How many L's? How many? Like.
It sounds like a wine to me. Anyway,
It sounds like a seltzer water.
That too. All right, can we do Hot Corner or Chart Report, and then we'll bring Sean on?
Please.
Oh God, I'm sure Sean is loving this conversation. Correct. Wait, which one first?
No,
Hot Corner.
Yeah, Hot Corner. Baker.
Hot Corner. So hot right now.
What do we got? Yeah, the Baker.
All right, so we always pay extra close attention when we see particular funds that have great track records pop up on our list. Today we had that. This is my, number one favorite company to track. I think they probably have the best insider filing track record of anybody. So we pay close attention when Baker Bros is on our list. Throw up the Madrigal Pharmaceuticals chart, MDGL. So when they buy,
it's Madrigal.
they buy in size. These guys come in, they take huge positions, and they hold the stocks for a long time. I want to go back, and after we throw up the magical chart, or whatever you want to call it, I want to talk about another one of their recent winners. Madrigal.
Madrigal.
That's the one. So, throw up this chart next.
Throw up the biotech chart. Look at the base.
What are we doing?
The Madrigal chart, the one that Baker Bros just bought.
Put it up.
Oh, you don't have it?
I'm not driving.
You guys have it? Here, I'll drop it now if you don't have it. Look at the size of this base, man. It's a $3 billion pharmaceutical, not too far from King of Prussia Mall, speaking of which, which is hilarious. Here. Go to slide 2, Spencer.
But just look at the gaps in this one. Holy cow.
Yeah, but pull up a weekly.
I hate biotech stocks. I don't like to trade these things, but
Spencer, the chart's not coming out.
I don't mind following Baker Bros into their positions.
Wait, which isn't that not it?
Spencer, look at the chart you're showing. It looks terrible. Reset that. Come on, Spencer. Throw up a nice chart. MDGL is a $3 billion biotech.
It's the same. It's the same chart. I
can't see it.
Wait, yes, we can. I see it.
You see it, Strazza?
Yes, it's up there.
Now I see it.
Okay.
Yeah, listen, could you buy a base breakout?
Put it back up.
It's up.
No, it's not.
JC, the chart is up. Assume it is up, okay?
All right.
Okay.
There it is.
All right, so what do you do with this one? You don't buy it here, right?
You buy the breakout. But I do appreciate the Baker Bros stepping in. What was it? 20-something million?
24 million.
$24 million.
They don't take small positions. Throw up the Seattle Genetics chart, SGEN. So this was one that they've been involved in really for a super long time, but in size since about 2019. They buy biotechs that are going to get acquired, is what you tend to see with Baker Bros. Almost every time. So clearly these guys know what they're doing. They probably have a lot of friends in the space. It's the kind of industry biotech is. Seattle Genetics, I mean, look at this winner for them. Another one's Beijing. We could do it all day. You know a lot of the examples. Talked about them on different videos, but problem with MDGL, if you wait for that base breakout, I don't know, that's a double from here, right? So wish the chart kind of looked better. But one thing you could always do is go and just look up their 13F, right? Because this is one of those companies where looking at the 13Fs is not a bad idea because they're so long-term in their views, right?
If you really want to be in it, you can trade it against that 113, that 130.
It's just, if you
really need to be in it, you could trade it against 130. It's not terrible, but it's not for me. I'd rather be buying a breakout, even if it's far away.
I'm with you. There's better looking biotech stocks. And I'm sure this will be a winner for them, but it doesn't mean it's going to be a winner for you.
True. Anything else stand out in the old hot corner?
No, not really.
Nothing. What about this Bill.com? $1 million from the chairman and CEO. You think he bought $1 million because he thinks the stock goes down?
I think he bought $1 million because the stock just had a hole blown in after earnings.
Yeah, that's tough.
This one.
I know, but this thing gets above 70. I think it gets going again. I mean, this thing's gotten killed.
Listen, I bought a bunch of stocks over the past few months, and vast majority have worked great. I bought one that looked like this, C Limited, literally just like this, and that's the one that I'm getting killed on. So that's what happens. You catch falling knives. Sometimes you get cut. Hey-o.
Okay. What about the chart report? Anything good?
There was a couple things in there. There was some IWM stuff, a lot of IWM stuff.
Hit it.
Yeah, hit it. All right. I'll bring it up on the screen right now. And there we go. Where's my chart report bumper? Oh my gosh.
Do we have Patrick?
Sean.
We have Sean. So all right, chart report. There it is.
Johnny. Oh, Sean's not here yet. All right.
I mean, there's the chart reports here.
No, I thought Sean was joining us for this. This is a great look from Ian. About the range that we've been in from the last, since last summer, really. We got to the bottom of the range, and the buyers came in again, as they have consistently done, and we're pretty much right in the middle of that range now. Historically for me, for continuation patterns don't last this long. If this was a continuation pattern, this would have resolved in the direction of the underlying trend a while ago. No, go back and find me continuation patterns that last this long. It's like more of a reversal than anything else. Thoughts there, Strazza?
It's accumulation. Totally. Way too long for continuation. Doesn't mean it can't continue, right? It's just continuation patterns are typically short term. This could be a massive distribution pattern, but buyers continue to, refuse to let this thing break the lower bound. So until that happens, yeah.
I made the top 10. Can you scroll down there to my chart? It was a good one.
Let's not all tweet about small caps at once here.
No, keep going.
I'm going. Actually, I like that. That was fun.
One more.
Okay.
There it is. Look at that chart, huh? Come on.
It's a cold take, though. It's a super cold take.
It's a cold take?
Yeah, the people who are buying Ferraris, they don't really matter.
Are you saying that recessions are a choice to some?
You're buying Ferraris, probably.
Can I just say I tried the Formula One Grand Prix trade. It didn't work for me. But it didn't involve Ferrari. It involved Formula One.
Also, I'm gonna go to the Poconos racetrack, and I'm gonna ride the Ferraris and the Lambos and stuff. But I hear the Porsche is the best one, so I'm looking forward to confirming that is in fact true. I know nothing about cars. I just feel like theoretically it probably should be maybe one of the other ones, but everybody says the Porsche is the best drive.
Don't hurt yourself.
Please. There's a guy, and there's like a helmet,
seatbelt too.
Yeah, I think multiple seatbelts. It's more of like a.
Oh, they really strap you in like you're like driving a fighter jet.
Yeah, but I'm gonna be scared. Yeah. I'm gonna be driving so slow, man.
Wait, JC, how tall are you? There are height restrictions on that.
I'm 6'1".
Okay.
Yeah, you're too large for some of these cars.
I'm good.
No. The height restriction is like 6'4" or 6'5".
I'm good.
Okay.
I don't think I can be an astronaut though.
Guys, get the chart report for free. Goes out every day. Link is on the screen and in the description on YouTube. Let's bring on options. Sean McLaughlin.
Bring him in.
Let's do it.
Shawnee baby.
Shawnee.
Top of the morning, fellas.
Top of the morning to you.
You know what Sean was saying in our meeting yesterday? We were coming out with trades, and Sean's biggest beef with some of these trades is that it wasn't aggressive enough.
He's been saying that a lot lately.
Last few weeks.
Hey, I'm not a one-trick pony, fellas. I know it looked like it for the last 3 months, but I am definitely not a one-trick pony.
We were coming into most weeks over the last several months, looking to collect income. Volatility was elevated, premiums were high, collect that cha-cha, and then the volatility index just got destroyed, and you're seeing it at the individual stock level. And, the strategy's just been different. However, as bullish as we've been over the last couple of weeks, as aggressive as we've been from the long side, trade yesterday was the exact opposite. Funny how that works.
It is funny because you've been kind of pounding the table for the last, 3 weeks about wanting to get short Eli Lilly. And I kept having to talk you off the ledge because you wanted to do it like a very irresponsible trader. You wanted to sell calls in a healthcare / biotech stock.
Worse. Sell calls and use them to buy puts.
Well, yeah. Either way, it's a bad look for you, and I'm glad that you listened to me and I talked to you off that ledge. But
Well, there was earnings coming up and stuff like that. So there was other reasons. Not that I care so much what you think.
Right.
It was more because of the
well,
earnings.
the thing is, we've been talking about this trade for 3 weeks. I've been telling you, no, it's a bad idea, but only because I didn't like the way you were forming it. And then yesterday, talking through it again, it finally started to make sense to me because I was like, hey, I do like that this thing could sell off here. It's had quite a run. It's like one of those story stocks right now that it's often pays to take the other side when a stock is in the news like it is right now. And we could do it in a defined risk way with puts using a put spread.
Yeah, but Sean, don't front. The reason you like this trade so much, what finally got you was the portfolio diversifier.
That's where I was headed with that. Yes.
That's what got you.
What finally turned the key for me was you just kind of sprinkled it in there in that conversation. You weren't even thinking this way, but you mentioned something about portfolio diversification and how we have a bunch of aggressive longs on now. And all of a sudden I said, you know what? He's right. I do need some bearish bets here to kind of temper the enthusiasm of the rest of my aggressively long trades here. And then once I couched it in that phrase, in that scenario, I was like, yep, now it makes sense. We'll do it in a defined risk way, not irresponsibly selling naked calls. We'll do it with long puts. And also, I really liked you guys were sharing a chart. You don't have the chart up here, but you were showing a more zoomed in 1 year chart. Oh, there it is. Beautiful. I love that gap there from the summertime. I feel like that gap, if nothing else, can act like a price magnet for any bearish bets here. I think that also might act as support, which is fine, because what we ended up doing, JC, this is we bought we bought options in April. We bought the April 600 strike puts, and we sold the 500 strike puts against it to help help pay for that trade. And that 500 strike, wouldn't you know it, coincides with the beginning of that gap.
Let's talk about that for a second, because in this particular trade, we are selling the puts to, number one, help pay for the other puts that we're buying, and therefore capping our upside. But we're capping our upside at the strike. That's our downside target.
Right. And I'm doing that for a number of reasons. If you want to bring up that previous chart you just had up a moment ago, these are not the types of charts that I want to get aggressively bearish on. I might get tactically bearish, which is what this trade is, but is that a trend? Like, I'm not willing to sit here and say, JC, this is the top forever in Eli Lilly.
I have to be.
No, I'm not, and I'm not willing to say that. That's not what this bet is. This bet is more of, hey, this is a tactical, this thing's due for a pullback potentially. It's in the news, those things tend to not work out well for people. And I love that gap that's going to act as a price magnet. And you know what? When we're selling that put, one thing we didn't mention is, we bought the 600 strike put, we sold the 500 strike put, which the 500 strike put is out of the money. And you know what? That's a bit of an edge trade. There's a little bit more implied volatility in those lower strike puts, which just helps tilt the odds in our favor just a little bit. And you know what, JC? If you make it a habit of tilting odds in your favor over the long run, that tends to work out. Not on every trade, but over the long run.
I learned that from you, that's for sure.
This stock will never see such high prices again. Throw up my Gilead chart. This is Gilead in 2014. We're going to look back in 5-10 years and say, oh my.
Strazza's making a call. I like it.
You can't. This is the toughest stock in the entire S&P 500 to understand why it's priced where it is. NVIDIA makes sense. This is just crazy. So this was Gilead in 2014, and here it is today. Throw this one up.
The suspense is killing
I
me.
think this is what Lilly has. And the reason I'm using Gilead is because this was the wonder drug. This was the last big wonder drug.
The last big wonder drug.
Yeah. So now this is Gilead today. 10 years later, that's what we
the difference is between these is Gilead actually cured a disease. I don't know if these drugs are going to like cure people being overweight. They help you lose weight, but people will always be overweight, right? And so there's going to be a continuous need.
Wouldn't it be hilarious if 10 years from now we look back at this wonder drug that's going to cure obesity, and what we actually find out is that it just allowed people to get more fat, and this is actually just
thank you, Sean. Thank you. Yeah, right.
People are gonna start looking in the mirror, seeing their saggy six packs, and it's all gonna come crumbling down.
Yeah, I'm fading this whole story. I'm not buying it.
I'm so bearish, Lily.
I mean, I'm not so much fading the stock. I'm just the whole story, the whole idea that a magic pill, a wonder drug, is going to solve what might be, at least in America, one of the biggest health problems in America. One little pill is going to solve that? No way.
And now the heart stuff, like, what are these guys up to? Somebody's up to something. Now it can also treat heart disease. Oh, come on. I don't know.
I like Strazza's point yesterday of
sounds crazy.
now they can, there's more quote unquote good news coming out of this, and they're selling off on that news. How many times have we seen that one before, Shawnee?
We've seen it.
While the market is having one of its best days in years, Eli Lilly's having one of its worst days in years.
On good news.
Off the heels of this international study that this drug can do things for your heart. I don't know.
Oh, yeah, and didn't Sam, our intern, come in hot during the meeting yesterday and drop a bomb about how this was, or yesterday at least, Eli Lilly's performance yesterday was the worst performance relative to its sector ETF in like 4 years or something like that?
Sam coming in hot yesterday with the fun facts.
I love it.
And on an absolute basis, same thing.
Yep, so we're bearish on Eli Lilly. Defined risk. That's the way I like to play it. And look, I'll be fully honest with you, and Strazza knows this because he and I were belly aching about this a few months ago, is that, man, every time we put bearish trades on, we just get whipsawed out of them. And look, I fully accept that may happen here, but bearish trades are so hard. I know it's real sexy to put on bearish trades and a bearish tape and to be the guy that caught the collapse in some big stock. Everybody wants to be that hero. And yes, there are big trades made on the short side, but man, short trades, especially if you're a swing trader, they are the hardest trades, man, because every force is working against you.
And then hold on. And then also remember that one of the worst things that can happen to you is that you're correct on that call and you make the call and the stock market falls apart and everybody says you're a hero. You always want to get the next one. You feel so good with everybody telling you how smart you are that you are so dumb that you actually believe it. And you want to call the next one. And the reason I know this is because I'm so dumb that I thought I was so smart after the great financial crisis and everybody telling me how smart I was. Every year I was trying to call the next one. It took me like 3 years of real pain. And I remember in 2013, me being like, there's no way transports can go any higher. And they just ripped in my face. And I said, this trend following thing is probably more for me than, trying to call another crash.
There's something about being a bearish hero that people just can't get out of their head. They want to be that guy or that girl. And when the markets get dicey, if you watch cable television, you see the same faces getting trotted out when markets get scary. It is what it is. We're smart enough to know better.
And they're angry people. They're really angry people, too. They say mean things on Twitter. I feel bad for them.
Wait till the market crashes. You bulls are really going to get it. Okay, bro.
You'll get yours.
Also, it's much easier to get out than it is to get back in. So you have to be right twice. You have to be right on the way down and on the way back up.
Like, wait till you see what happens next year.
Hard.
It's like, yeah, we'll see what happens.
I mean, look,
next year. I'll worry about it.
I get it. When I started trading in 1998, I'll tell you that the guys I traded at a prop trading firm. We were trading NASDAQ stocks during the internet.com bubble. And I'll tell you, man, all of us fast traders, we made all our best money getting short things. Even when the market was rising, even before the bubble popped, we all had our best days when we were shorting stocks and things were getting crushed. So I get it why traders like being short, because profits, when you do get it right, profits on the short side definitely tend to accrue faster.
A lot faster.
And you got to be so quick to take those profits, and that's the hard part.
That's right.
Mm-hmm.
That's right.
All right, let's do some recess.
Do it.
Then we can hop out.
I'm going to double down on my call. If you're looking for a bullish catalyst for AI, Emily Pellegrini should be that.
I am not
I'm
Googling that. I
being
have no
incredibly
interest.
sincere. This is not. I'm not being creepy. I'm not into pornography. Like, no. This is just observing. Can you show this pretty lady, please?
Dude,
She's absolutely gorgeous. She's
What is
What
wrong
the
with
hell?
you?
How did that happen? How did that get in there?
There's nothing wrong with these photos. I'm just showing you. Like, is a very good-looking gal. The point is, this is incredibly powerful technology. We've seen these sorts of people take advantage of new technology very early on in the past, and they're doing it again. That's all I'm saying. It's very impressive.
Okay, so explain to me, are those images AI generated? Is that
Yes.
not
Yes.
real?
Yes,
That's not a real person.
That's not real.
That's not a real person at all.
Not a real person
At all. That's my point.
We are doomed as a society.
She's gorgeous. I mean, the AI. I mean, you.
It
you never know.
it is
By the way,
gorgeous.
if you go to the what is it? The reels? What is it? The videos? The TikToks? Her TikTok?
Yeah.
She's like a real person. Like the video is better than the images.
I'm telling Morgan to take away your Instagram. This is just got out of hand.
Just saying, guys. I'm telling you guys. Telling you. Years from now, we're gonna be like, bro, remember when JC was talking about that girl? Watch.
All right, the crowd wants to know. 2 years from now, are us, the four of us, our four faces, are we going to be doing this show, but the AI generated versions of us that look much more handsome? I know that's hard to
We
believe.
can, but here's the difference. These are people. The people that are losing their jobs don't have any real talent, right? Because AI just makes fake people. Like, they're just like, they look pretty or whatever. Like, they don't have actual skills. For us that actually have talent and can actually think through things and use our mind, these tools are not replacing us. They are helping us. They are making us more efficient.
I would even go one step further. People who provide original thought on the internet are ultimately becoming more and more the source of AI.
Yeah, that's true.
And something that was said the other day about, like, hiring like a social media consultant, like, oh, you have to do threads or you have to do this. Whatever happened to just putting out things that people want to read?
How long did the Instagram threads thing last for? A couple of weeks?
It didn't. It never even took off. So fascinating.
I mean, if you think AI is superior to picking stocks, you should go look at the AI ETF that picks stocks based on AI. It's not doing too hot. So
and imagine why. Yeah, we're not going to be replaced. We're gonna be more efficient and do things faster and better. Yeah, for sure.
More handsome. That's what I'm hoping for. Just more handsome.
I don't really have a recess except to say that we got an options jam session at noon today. Chart request live at 1. And JC, you're going to be on Twitter TV after the close.
How about that, huh?
How about
our
that?
Canadian friends.
Oh, they're Canadian, eh?
Oh, they're based out of Toronto, eh?
They are.
All right, I'll bring my blue light.
Good guys. Hey, fun fact, JC, they're all Bills fans, so tread carefully.
Some of them are Toronto Argonauts fans.
Reluctantly.
I like
4:15 Eastern time today for that. All right, that'll be our show today. Thanks to Eddy Elfenbein. Thanks to Sean. Thanks to everyone watching on YouTube, watching on our site, stockmarkettv.com, watching on Twitter. We appreciate you as always. Go make some money. Have a good day. We'll catch you guys later.
Adios.
Later, guys.
Run it. I can't take no loss. I don't need no